How did I get so lucky? Look at this duo. How are you guys?
Doing great.
Good to see you, Greg.
Hey, it's good to see both of you. Varun, good to have another conversation with you. And Jay, good to meet you for the first time, although we discovered that we both worked on the same highway in Dallas many years ago. You guys in Detroit today?
Yes, we are.
You're going back and forth, I understand, Jay.
I am, yeah.
How are you enjoying that?
I love it. I really do. It's Detroit is amazing. And you know what Rocket means to Detroit, it just blows your mind. It's just a great story. And the team here is I just really been loving getting to know them and working with them. So
you having a good time?
Good. I am having a good time. Yeah.
Yeah. So we have a lot to unpack today. Varun knows how I prepare for these things. So I've got 4 pages of notes here. We'll see what we get to. But Varun, of course, CEO at Rocket, now interim CEO at Redfin. And I'm going to ask you about that. And Jay, President and CEO of Rocket Mortgage. And you've got 18,000 people reporting to you. Hopefully not all directly because you're not sleeping if that's the case. But Varun, let me ask you about Varun, let me ask you about the interim CEO Redfin piece, because Glenn stepped down on January 13th, announced his resignation. 3 days later, he was gone. Was that something that was planned? Was it something that he decided on his own?
Yeah, I think, look, I'll start with a little bit of context. I mean, Redfin has been around a long time, and Glenn effectively he's not just a CEO. I would almost call him a founder. I mean, he was the first CEO of the company. He's been in the seat for 20 years. Glenn and I have an amazing relationship. I really respect him, admire him, everything that he's built, everything that Redfin represents. And we just had good conversations about where he was and what he wanted to do. I would say 20 years in the CEO seat is a long time for anybody. And I think we kind of came to a mutual conclusion that it was just time. He's an entrepreneur at heart. He had, 1 or 2 more things left. And as we started talking about the next chapter, I think we kind of came to a mutual and respectful realization that it was just time. Redfin
things happen, right?
In good hands. Yeah, Redfin is in good hands. It's now a part of Rocket. The team and the bench that he has built is in great shape. They're integrating very smoothly. And we just kind of reached that conclusion.
Well, I'm curious to know how that's changed the trajectory of your day-to-day, right? Because you go from running this huge conglomerate and all of a sudden now you've got someone running that. And here you are now as the interim CEO of Redfin. So how has that changed how you're tackling your days until you find that right person? And are you close?
Yep. Yeah, well, I'd say, look, the nice thing about being the interim CEO of Redfin is I have incredible leadership and such a strong bench. And what we've done with Mr. Cooper coming in to Rocket is we have strengthened our bench as a company. So we have Jay obviously running mortgage servicing, title, which is kind of the belly and beast of the organization. Jay is longtime public company CEO. I mean, he knows more about mortgage than most people on the planet and servicing. So I felt very comfortable spending more of my time on Redfin. Of course, I'm deeply involved in running Rocket as well, but this has been really nice because we have a extremely strong, capable CEO managing a lot of the core Rocket business today. We also have a couple of other leaders within the Cooper organization that have now joined Rocket. We have Kurt Johnson, who is the CFO of Mr. Cooper, who's now the deputy CFO of Rocket, working with Brian Brown, who is now our president of Rocket Companies. We have Kellyanne Doherty, who is now our chief people, places, and culture officer from Mr. Cooper. That is now
that's quite a title. You need 2 business cards for that one.
We do. But just overseeing all of our people strategy for the company.
Yeah, that's important.
And so the nice thing about all of this is we just have a much more significant bench strength. I think we have the best and brightest leaders in the company and in the industry, frankly, all working as a part of our leadership team. We actually had a great meeting yesterday where we were talking about how constructive our culture is now as an integrated organization. And it's also given me some time to focus on Redfin. I think the world is changing pretty quickly. And I think Redfin's potential is significant to grow and to be a major disruptor, as it always has been. And so I've been very deliberate and focused with my time there, working very closely with the leadership team. I've been spending more time in Seattle at the Redfin headquarters, and I'm loving it. It's been great. And in terms of the CEO search, I think we're being very picky. There's a lot of interest in this role from many folks. Some who are deep experts in the industry of housing and home search and real estate, and there's folks from the outside, sort of more of your typical Silicon Valley product engineering type executive that are also interested. And because quite simply, a lot of people know Redfin, a lot of people love it and use it. It's a beautiful app, beautiful platform. But we want to find the right leader. We want to find someone who will be an accelerant to the organization, someone who will have a strong sense of culture and has a point of view on where we want to take this beautiful business. So a lot of interest. We're kind of in the middle of the process.
You're sitting next to a legend, Varun. You know that, right?
I do.
I just want to make sure, and I don't think Jay gets enough love, enough credit for all the things that he's accomplished in his illustrious career. I mean, it's just been remarkable. And, people talk about Mr. Cooper and that's all they see. But underneath that, there's quite a story. You started in the business at Arthur Andersen in Atlanta in the early 90s, CFO at Barrett Bank, which was acquired by Bank of America. You just mentioned you moved to Dallas in 2000. You managed the non-prime lending business at Context. You served as CFO there. And then in 2005, Context was acquired by Fortress Investment Group. The name was changed to NationStar. In 2018, NationStar merged with WMI Holdings, the old Washington Mutual shell, and the combined company became Mr. Cooper Group. So you are no stranger to change. You're no stranger to integration, Jay. So within that context, how did that make you confident that you could pull this off?
Look, it's to your point. I've had a long career and been very fortunate. And as I look, over that career, we have been able to adapt and change as, the market has changed and as the market has presented us with opportunities. And, when I met Varun for the first time, we were just very aligned, in how we thought about the world and how we thought about home ownership and what mortgage should ultimately look like. And from that point forward, our relationship has just become stronger. But I have, tremendous confidence in our ability to execute. I mean, at the end of the day, at Cooper, we did hundreds upon hundreds of, servicing transfers. So for us, this is second nature, honestly. And, the team that runs the servicing organization is fantastic. And we've, taken the best of both teams. And so I've walked into this with a high degree of confidence, and I certainly feel that way today. I mean, we're ahead of schedule in just about every metric. So I'm very pleased.
Jay, I'm going to go back to May 31st, 2023. Do you remember where you were that day?
May 31st, 2023.
Yeah, that's right. Yeah. That's 670 days ago. This is such an ironic piece of sound here that I'm going to play from your time on CNBC. Let's take a listen to what you were talking about in terms of the climate.
We think over the next 3 years, you're going to see 4.3 trillion in servicing actually trade, which is, I've been doing this for a long time, and that's the most significant number that I've ever seen.
So I don't think you thought at the time that you would be the one making the trade. How long had you been thinking about, potentially partnering with someone? I mean, there's probably only one entity you could partner with. So was this something that when you were there on that set, I'm assuming you were talking about it from the lens of acquiring, not being acquired?
That's right. I mean, if you think about the last 5 years, we've acquired, more servicing than anybody, probably in the history of servicing. And so that at that moment in time, it certainly was about what the market opportunity was from a, servicing acquisition standpoint. But look, I think as I thought about Mr. Cooper, 10 years from now or 15 years from now, and the ability to combine with Rocket, like that to me is the unstoppable force, right? It is kind of a species of one, and you bring the power of Rocket, the brand, the origination capability, now with Redfin, with the largest servicer in the country, It just made a ton of sense.
There's a question I have to ask you. Let me just get it out of the way. So it has to do with other acquisitions that you've made, and in the past you have at times shut down TPO channels. This is a question people wonder out there in the ether. So I'll put it on the table real quickly to ask you why this time that will be different.
Yeah, if you look at some of the previous acquisitions, they just weren't at scale. I mean, they were small operations. In some cases, they were niche operations where they were only focused on FHA business, et cetera. So I didn't see the ability to really grow in a meaningful way that would ultimately add to, the bottom line. Rocket's completely different, right? I mean, when you look at the pro business today, it's quite significant. And when you look at the power, again, of the combined organization, I think, the future is very bright and we can really, really grow that channel. So it's almost, and it's an apple and an orange. These other platforms were subscale, didn't make a lot of sense to invest. Here, I feel completely different.
Yeah, that makes sense. But Varun, we're gonna get into some good stuff. Don't worry, we're just warming up, man. We're like the pitcher in the bullpen. We're doing this. We're warming up the arm. We're stretching. We're gonna get into all the stuff you're doing. Don't worry. I'm just touching on some things. Varun, you've been in the business, the mortgage business, for less than 3 years. You've got Jay, who has been in the industry now for over 25. So, I'm curious to know how having someone of his caliber has helped to accelerate the learning curve.
I mean, I would say it's essential. And, one of the most important things when you're building a company is to have what I would call a balanced leadership team. And I feel very fortunate. I was talking to Jay about this last night. When I sit around and look at our CEO leadership team, which is effectively the most senior leadership team of the company, it's extraordinarily balanced. I mean, you have technology leaders that don't know anything about mortgage, but understand AI like the back of their hands. You have marketing leaders who, understand the consumer and the mindset of the consumer today, tomorrow, and 5 to 10 years from now. You have deeply steeped leaders that understand mortgage and servicing. But I would also say that our leadership team is not conditioned at all. I mean, one of the things that happens sometimes when you have a lot of experience is that you think there's only one way to do something, and that experience kind of carries you through chapter after chapter after chapter. But what I love about this team is that experience actually creates wisdom, but that wisdom drives evolution. It drives new thinking. It drives more disruption. And so we are a leadership team that's extremely restless. We resist conditioning, despite the fact that we have, deeply steeped leaders that have very deep domain expertise in many areas. And that creates a team that's extraordinarily balanced and very complementary to each other. And the reason I think that's really important is because, there's leaders like me who have to have come up to speed very quickly and understand things like, capital markets and hedging infrastructure, day-to-day pricing and licensing. These are things that Jay steps in and is just natural. He just naturally understands the dynamics of how you think about your margin, how you think about rate sheets, how you think about, for example, where you need to push and pull on operational workflows and underwriting times and turn times and things like that. And so it's just an accelerant for me. I mean, I'm the type of person who really likes to be surrounded by people who are more capable and smart, and therefore I'm a sponge. I'm able to just try to learn from them day in and day out. And so, this acquisition, as well as I would say the bench of strength that we have within the Rocket organization, has been a huge blessing, and it's kind of allowed me to ramp. I'm nowhere near the level of experience that I think I would like to have or need to have, but I just prefer to have the mindset of a student and just always be learning.
Yeah, Jay is so well-rounded. Even in tough times. In fact, I was reading that at one time in your career, Jay, you had a pretty large amount of tougher subprime borrowers. Your portfolio at that time, this was many years ago, sat around a quarter full with distressed loans. And so, not that you ever want that to be the case, but Varun, you got the greatest insurance policy on earth sitting next to you. In the event things start to turn south, and I guess a perfect segue would be, Jay, as you look at the dynamics out there at play right now, and you look at consumer debt, you look at consumer confidence, you look at that whole picture, you see it with Truebill. I mean, you have access to be able to see how people are spending and what their habits are. What are you seeing out there, Jay? And what is your level of concern that the consumer is hanging on by a thread?
I would say, Greg, that we're not seeing a lot of cracks today. I mean, if you think about where we're at, you've got, all the products, or the majority of the products, are conforming products. So you're not going back to the subprime days where you had loans that just didn't make any sense to begin with. These are well underwritten loans. The other thing I would say is the equity is still fantastic, right? When you look at the, updated kind of LTV in our portfolio, there's 40 points of equity in, our portfolio. And so those two things, I think, make this certainly a different point in time. But, there are some, I would say slight increases in delinquency, more in the FHA kind of portfolio, but nothing that I would be overly concerned about at this point. But we're obviously
far from a code red. Yeah, far from a code red.
But to your point, I mean, in our DNA is, being able to help borrowers that are distressed. Like, if I think about one of the greatest things in the history of the company, it was being able to help thousands upon thousands of borrowers in the last, great financial crisis. And we still have that capability. And I think we could still do that if we do get to a point where you see, a code red or increased delinquencies.
Yeah. I'm so curious about the courtship between you two, right? Because I want to just know who fell in love first.
Probably me. I would say me. I mean, look at him. How do you not?
I wasn't going to say that,
thing, man. Yeah. I mean, just the draw.
I mean, you guys go to. It looks like you go to the same barber, so
yeah, that's true.
At least you have that in common.
Not a lot to work with, but they do what they can. I think I'll start because I think in the beginning for me, one of the things that I was very focused on is just learning from the outside. I mean, I had a huge learning base from within Rocket to learn the company, the culture. But Jay was one of the first conversations I had from, truly industry. I wanted to learn what it was to run a large company. I wanted to learn from CEOs. I believe there's no substitute for experience. And I think, as Jay said earlier, I think we just hit it off. I think for me, the biggest thing was not, we had an intellectual, bond that was very strong, that we both saw the world and said, look, mortgage and servicing belong together. When you do that right at scale, there's this beautiful thing called recapture. And the two of us represent being able to do that at the highest level of scale with the highest level of effectiveness. And ultimately, that leads to better things for the client, because that means a more seamless experience. It should mean lower rates, lower fees, and it should create a good business for us. So it's kind of a win-win-win for investors and stakeholders, for clients, and for Rocket as a whole. But to me, that's like all the intellectual babble, if you will. Again, the bigger thing was just like the CEO life is lonely, right? And we talk about that a lot, right? And it's lonely at the top, right? And so having a few more people around you that just understand some of the day-to-day, and just having a shoulder to lean on or someone to commiserate with and just to be able to talk to, a lot of it was that for me. And I met with many other leaders, but there are certain leaders that you're like, I just want to call them and shoot the shit and just say hi. Or we text each other Seinfeld clips every now and then. That's another thing that we do. But it's like that kind of bond has nothing to do with the work. It just has to do with the person. It has to do with mental quality. And that's how we both kind of run our leadership teams that way. It's that we can be talking about a super serious topic 1 minute, and the very next minute just be sharing a laugh and just talking about something random. And so I don't know, I'd say I fell in love first.
Simple answer. It was probably a tie, actually. But look, I think for me, just spending time with Varun and just his intellectual curiosity, his intellect in general, his knowledge of product and tech, and how he thinks about where the industry's going, it really was kind of love at first sight. And when we started talking about doing, this together, like I said earlier, I felt like it was, the only company, he's the only leader that, made sense to me. And
Yeah.
so, and it's been, I'm like a kid in a candy. I mean, I'm learning new things every day, and it's because of Varun and because of, the other team members, but it's great. It's really fun.
Well, whenever you're negotiating anything, when I negotiate trading a football card with my son, it's complicated. Okay. So I can imagine when you're going back and forth negotiating something like this, that there's a lot at stake here, right? There's lots of conversations, and sometimes you hang up the phone and you think this is definitely going to happen. And then I'm assuming there were other times that you hung up the phone thinking this might not happen. So what were those times like when the negotiation felt a little heavier, and what got you through it, Varun?
Yeah, I mean, I first off, I just want to acknowledge the question, because I think, this is a high stakes. These are bet the company moves, right? I mean, you are literally betting the company, and Mr. Cooper is half the size of Rocket, and so it's almost more of like a merger than it is an acquisition. And so I think the thing that for me that was at the end of the day, we would have kind of our official negotiation conversations that some would go great. Most of them went pretty well, but there were some dark days. But we would always have a follow-up conversation. Always. I remember, like, after every call, it could have been at midnight on a Saturday night, or it could have been at 3:00 in the morning. But if either of us were feeling some kind of way about something, we just wouldn't be afraid to pick up the phone and just call each other. And that was something that I think kind of kept us going, is that we had each other's backs, and we both represented the same thing. We wanted the same thing. And a lot of the times it's like we represent a bunch of other stakeholders. We represent our organization. We represent leadership. We represent board members, investors, the industry at large. We represent the market dynamics that impact us, because we have a lot of folks that are whispering in our ears and telling us one thing or another. And so, I think the thing that for me was particularly helpful is just knowing that if I was feeling some type of way, I could just call Jay and explain, and he could call me and explain, and we would both sleep on that or wake up to it and kind of carry it forward. And I think that's continued, long after the integration. I mean, I would say, getting the deal done felt like it was maybe the hardest thing, but the hardest things are all of the things that come after it. It's the cultural integration. It's creating the right level of significance for the things that we want to do. It's recommitting to each other that we're still on track. It's making sure that we're continuing to create balance. It's creating the right kind of space, and sometimes being together. And in situations like this, it's other times where, it's important that I give Jay the space to be in the role that he actually is in, which is a massive role for the company. So, I just think it's kind of a living, breathing, organic thing. I mean, ultimately, this has nothing to do with strategy or intellectual growth or mortgage or anything. It's just about relationships, trust, culture, and I would say friendship and alignment.
Yeah, that's the foundation where all great things happen.
That's right.
Jay, do you want to comment on that as well?
No, I think Varun said it really
Okay.
well. As I reflect on, going through that process, it was us being able to connect one-on-one, and if there were issues or tough discussions, that just staying together and linked through that process was the key. And you said it, Greg. I mean, it is all about ultimately the relationships and the trust and the partnership. And I think this is something that Varun and I continue to this day, as he said.
Yeah. So you're servicing 1 out of every 6 mortgages now. We'll get into the good stuff now, Varun. Okay. 2.2 trillion in servicing, and there are 3 things you and I discussed in preparing for this that Rocket is working on: tech, company partnerships, and then there've been some leadership changes. So unpack all that for us.
Yeah. So look, I mean, at the end of the day, our strategy is pretty simple. It's that we look at homeownership as a continuum. We think that today, what was striking to me is like these different industries around homeownership are incredibly disparate. You have the home search and real estate experience at one part of the funnel. You then have the entirety of kind of the financing experience, where you get a mortgage, you go through title and appraisal and closing. Then you have servicing, where you have effectively kind of the lifetime relationship with the client. And these industries, could not be more disconnected from each other, and yet every consumer has to traverse all three of them in order to successfully experience home ownership. And so our viewpoint was very simple, which is, the whole is greater than the sum of parts. And these three funnels are actually part of one super funnel. And if we can integrate them the right way, we can do something that no one has done before, which is we can create lifetime value to customer acquisition cost ratio that has never existed in housing. Because servicing creates lifetime value. You can reacquire clients at a lower cost of acquisition. And then you can remove friction from the process by investing in technology, investing in automation and personalization. And so you can create better economics for the client, and you can create better economics for the business. And it also allows you to kind of survive and thrive in any kind of market or interest rate environment, or as Jay likes to say, you have an all-weather company. So, that's the foundational thesis for how we think about Rocket as a whole. We've bet very big on technology. We've thought a lot about distribution. How do we acquire clients from Redfin, which is, highest quality source of traffic for serious high intent home buyers? How do we leverage our servicing book to create great servicing experience and drive recapture so that we can create new business opportunities from those clients? Because it's not a surprise that the homeowners of today and tomorrow are likely going to be existing homeowners. So that servicing book becomes incredibly valuable in that pursuit. So, those have been kind of our big strategic focus areas. And of course, we want to have the best team in the business. And so we've had, leaders that have taken us from point A to point B. And as we're thinking about how do we get from point B to point C, there's always this question of asking ourselves, when you look at a leadership team, I use the analogy of drivers and passengers, right? Like the entire world around us is changing pretty quickly. If you're a SaaS company right now, I mean, trillions and trillions of dollars of market cap have been wiped off because AI is generally viewed as a massive disruptor to your core business, right? If you are, a tech company or a fintech company, I mean, you're just sort of seeing a lot of skittishness in the market. The nice thing about what we do is that we don't fit any kind of conventional definition of what a company is. We're not a mortgage company, a tech company, fintech company. It's kind of hard to categorize us. And we think of ourselves as kind of a new species, a category of one. And we think that reflects in our ability to build kind of a more unique business model. But that's a big evolution. And so, as we're looking at the new company, I mean, we've added nearly 10,000 people to the company as a function of both Redfin and Mr. Cooper. The company's grown by about 60%. And we need a different philosophy of leadership. We need leaders that understand that the world is changing pretty fast. We need leaders that understand and embrace what AI represents. At the same time, we feel pretty confident about our moat. At the end of the day, we also want to be a platform and an ecosystem. I would say Rocket, years ago was probably a little bit more closed off. We would really focused on direct consumer acquisition instead of distribution. We had a few partnerships that were successful, but we were not, I would say, an open platform, working with big distribution partners. And over the past 2 years, you've started to see that evolve. The product market fit that we've created, we feel pretty strongly about, for that folks that understand that concept. But now it's about distribution. Yeah. It's that how do you take the engine that you've built and find new and more interesting ways to create better distribution and better economics.
Well, let's talk about that, because you're bringing in business in a lot of different ways, right? You've got the TPO channel, you've got retail. So how do you thread that needle? Because obviously you're constantly being challenged by your competitors, right? And they're putting stuff out there, they're rumor mongering, talking about how you only serve this or serve that. Yeah. So I mean, I know how sensitive and caring and mindful you are, Varun, of this question. So can you do both? Can you be essentially what amounts to the first mega lender to be able to satisfy both channels at once?
Yeah, I mean, I think my answer is unequivocally yes. But underneath that answer, I would say two things. I think the first thing is, I think folks have to realize how big the housing market really is. I mean, the housing is a $5 trillion market. Mortgage alone is call it a 1.5-ish trillion dollar market. No one has more than single digit market share. And so these businesses can grow tenfold, 100-fold, and never run into each other. It's like there's a group of consumers. I'll use the analogy of mowing your own lawn, right? Because that was something I used to use in the past as an analogy. You have some folks that are always going to mow their own lawn, and they might be interested in the world's best lawnmower. You have others that are going to use a lawn service, and the world's best lawnmower will mean nothing to them. And in some ways, when I think about this theoretical channel conflict, to me, that would make sense in a market where you have like saturation dynamics, where you have players that have 40, 50, 60% market share, where these things are going to run into each other. That is not the case in housing. And I think that's an important reality that we really need to acknowledge, is that all of these businesses can grow orders of magnitude without ever running into each other. That's a good problem to have, and maybe at some point we would have that problem, and that would be a great thing, because that means that we would be more successful. So I think that absolutely these businesses can grow. The second thing I would say is that there is a common technology platform that powers everything, right? We want our brokers, and I'd love for Jay to comment on TPO in particular, because he's done some amazing things in a short period of time, from leadership to new product announcements to a new platform that we've launched. But the reason for that is that we are a technology company. Our data platform, our notification platform, our CRM platform, our loan origination system, our calculations engine, our compliance engine. These are all shared capabilities, our chat capabilities, our AI capabilities that are extended into the LOS and POS capabilities that we give to our brokers. We know that brokers care about competitive pricing, top tier service, fast turn times, operational workflows that match the way that they work. But it's not a compromise for us. For us, these are both channels that are healthy, that are growing. And we're going to keep investing in them, because ultimately we want to offer our consumers and our clients and our prospects the power of choice. I would love to hear, Jay has done absolutely heroic work in the broker channel recently, and he's made some big leadership changes as well. And I don't know if there's anything you would add.
Yeah, I think you said it well as far as the competing nature of the channels. Certainly, we think we can do both, and are very convicted around that. I think the recent change we made a leadership change and put Austin Nemec in charge of the channel. Austin is the best of the best, in my opinion. He is an amazing leader, amazing passion. He knows the industry really well, and he's somebody that both Varun and I are like, yeah, we're willing to invest in him and in this channel in a really meaningful way.
Yeah, I hear great things about him.
He's amazing. Truly amazing. And then we've rolled out some new programs, we've rolled out some new tech, and honestly, we've done most is just listen. Like, what does the broker community need? What do they want? How can we make them more successful? And I think that's a superpower of Austin's, candidly. And we take that feedback and then we turn it into action. I mean, you're going to see us deliberately roll out something every month that we're calling it our power play, but that is going to be meaningful to the community for sure.
Yeah. Varun, how would you like retail to think of Rocket? People like me, people like companies like NFM and other companies that represent such a large share of that pie that you were just referring to. But should we look at you as a threat, as an adversary, as someone we can learn from, collaborate with? You can't do it all, I don't think.
Yeah, look, I would certainly prefer that we think of this. I mean, the name of this podcast is All of Us. I think there's something remarkably solidarity-like about what we all have to do in housing. I think we represent the same cause. I think retail is incredibly important, but there are certain things that are just economies of scale, right? Like, we represent a demand generation pipeline from Redfin and our servicing book that I think are capabilities that could power a platform. I think we represent technology capabilities. No one wants to build, 15 different document classification engines or extraction algorithms, underwriting platforms, computer vision technology, right? Title and appraisal and closing. And so, I tend to think platform first, and then product second. And one of the big evolutions that we have been we've spent $500 million over the past 5 years on our data infrastructure, our AI infrastructure. And, I'm not sitting here talking about partnerships with Anthropic, OpenAI. I mean, we have those partnerships, but at the end of the day, for us, it's all about business value. But, I would like to think of a world in which Rocket is building an enabling platform for vertical applications, retail applications, B2B applications, new types of B2C applications. And I want to create an ecosystem in which many players can survive and thrive. Not just survive, but thrive, I should say. I mean, that's why, we want to create a real estate ecosystem. That's why we have a brokerage within Redfin, but we're also expanding that brokerage by partnering with Compass, right? And so these are just examples of where, our mindset is very much around building an open platform, and we think that if you do that the right way, it should allow many players to survive and thrive. And I think that the key thing is it's all about mindset, and it's about shared values, right? And I think it's kind of like the old adage, whether you think you can or you think you can't, you're right. And I think that if there's an opportunity to partner, and if there's an opportunity for us to think about where we can contribute together to a shared view of the world, that's exciting.
Yeah. So
it's,
go ahead, Jay.
I love your business, and I love, the retail platforms that are out there. You just have to have a lot of admiration for folks like you that have built great companies. And I think, you should look at Rocket as a source of strength. Like in our correspondent channel, for example, we want to be a buyer, of, loans and servicing, and continue to do that. So I think that's another way that we can, partner together.
His answer was better than yours, Varun.
That's that mortgage experience.
Hey, he's starting to overshadow you, man. Get out of here.
Please, never.
I'll take that as a compliment.
No, you know what? I knew you would. Let's talk about Compass for a minute. So this is a big deal. Compass Anywhere has over 340,000 agents, and they're going to have it's going to be very demanding. There's a lot of leads that need to go around, and the broker channel, it's hard to. I know you have the leads, and I'm sure you have mechanisms by which to get them to brokers, but you can't really control leads on the broker side as well as you can when the loan officers work for you on the retail side. You can tell them what to do, work in collaboration with them. Let me rephrase that. And so you have more control over the funnel. So with that in mind, do you agree, number one? And number two, Varun, very directly, where on your roadmap, if anywhere, does acquiring IMBs sit as you think about how to build out retail and, knocking that out in shots of 2 to 4 to 6 to 8 billion at a time?
Yeah, it's a good question. I'd start by just saying that I think that our thesis is that Redfin can be a significantly bigger demand generation pipeline for leads, whether those leads flow to our retail business, to our mortgage broker community, to Compass agents. I mean, Redfin has a pipeline of 50 million monthly active users. And what's interesting about Redfin when you compare it to other, similar competitors is the quality of traffic on Redfin, in my opinion, is an order of magnitude higher. Serious high intent buyers, and those that close a home, with some seriousness, there's a higher percentage of them that use the Redfin product. And that's not just for purchases. I mean, this is a pipeline of home buyers for, home equity loans, rate and term refinance, cash out refinance, and all kinds of mortgage products. So you take Redfin and you look at it as one source of leads, but then you have the servicing book as well, right? And the servicing book is north of 10 million clients who you see every month. And it's an incredibly high quality servicing asset. And then you have all the leads that come to Rocket Mortgage as well, right? And those are buyers that are usually looking for financing, but they're very high intent, very high quality. Some of them may have a mortgage broker, may not. Some of them may have an agent and may not. And so our view is pretty simple, is that we can generate way more leads than we are today. And those leads can create a pretty healthy and thriving ecosystem at the end of the day. That is just the math, that is the reality. I think that we have a significant portion of potential to help feed, obviously, our retail business, our TPO business, as well as the Redfin brokerage, but we can certainly do more for other agents out there. And that's one of the reasons that we have this partnership with Compass, is there's kind of 2 or 3 kind of key pieces. One is, having a lead sharing relationship by which we can allow Compass agents to thrive and succeed. One is obviously a listings partnership where we can feature Compass inventory on Redfin and on Redfin uniquely, which helps both Compass gets more exposure and consumers have a reason to come to Redfin because it has homes, and that helps with inventory. And then the last is a mortgage partnership where we are an exclusive digital partner for Compass, allowing the Rocket Mortgage platform to kind of shine through. And so, from my perspective, this is about demand generation and really building a muscle around being a demand generation platform. And if you get this right, what it allows you to do is then extend that platform to more and more parties. The thing I would say to your second question is, look, at this point, I think it's interesting. We have a lot of work ahead of us to get these integrations completed, and to get them humming, to get to the goals that we have for synergies, the goals that we have for economics, the aggressive goals that we have for how well our ecosystem and platform are performing. But our view is, we want to focus on high quality partnerships with like-minded players who want to achieve the same thing, and so we have built a corporate strategy organization from scratch. We've handpicked leaders to build that organization. And what this organization does is they spend 24 hours a day thinking about every opportunity that comes our way to build, buy, or partner. We have a healthy amount of liquidity and cash flow, and we're constantly looking at ways to move faster, whether it's organic or inorganic or through partnership. So it is now a fundamental muscle of the company. It's a strong muscle, obviously, that we have exercised with 2 major acquisitions and 1 partnership. I think focus is also really important because, when you're running a large organization, it's very easy to get distracted, and it's very easy for folks to look at bright, shiny objects and say, hey, is there a there? So we're pretty surgical about whether something accelerates our strategy, but we have a muscle now for us to evaluate and very quickly decide this is worth it, this is not worth it. For example, the acquisition and selling of MSR, something that Jay, has basically invented the category. I mean, that's an example of an inorganic, organic activity that we are just constantly doing, right, day in and day out. So I think the answer to that second question is definitely a yes, but it is, following a very careful evaluation process around how we look at, is this in service to our strategy? Is there a good amount of shared alignment? And then, does 1 + 1 = 11?
Yeah, there's a lot there, man. Wow, this could be a whole nother show. Because you don't live in a silo. Like, it's not just about what Rocket wants to do, right? And some of the things that you're faced with, questions that you ask yourself in those boardrooms, I'm sure has to do with what others are doing in the space, right? Because there's a finite amount of market share, even though you pointed out, accurately, that everyone has just a little slice. There's no dominant player in the industry, but you have other people, CrossCountry, UWM, and some others that are really taking some massive shots. So is your philosophy to push that out and just focus on Rocket? To what extent are you paying attention to the moves that are being made around you? And then to what extent does that influence decisions that you might make or not make?
Yeah, I think, I'd love Jay's perspective on this one, but, we have what we call our isms, and our isms are the value system of the company. And they're basically these sayings that reflect who we are, how we think, and how we sort of philosophically approach life and work. And one of my favorite isms, especially now, is called ignore the noise. And that's my answer to that question, is that,
okay, fair. That's fine.
We had our strategy and we've just been executing on our strategy. With Rocket, we learned through Rocket Homes that there was a huge potential for us to do more by being a bigger player in home search and real estate, and that led to the acquisition of Redfin. We have perfected an engine between servicing. I mean, we did about $600 billion of servicing before Mr. Cooper, and we have an 80+% recapture rate. And we realized that mortgage origination and servicing can be bridged with recapture. That led to this conversation with Jay, and that said, okay, you know what? Let's get the biggest mortgage origination engine and the biggest servicing engine to work together at scale. So, we didn't come up with that strategy by following anybody. We came.
I get it. No, it's fair, and I appreciate that answer. I appreciate
it. So we just don't. We pay attention to the market. We pay attention to dynamics, but at the end of the day, what the more pure thing that we focus on is how do we do good things for our clients, and like that, to me, that's sort of the thing that breaks all ties and that wins all arguments. Is that if you follow this strategy, how will that allow you to get clients better rates, lower fees, faster turn times, and a better experience? And if you can do that, it's worth pursuing. And so that's kind of our ultimate North Star at the end of the day, is we take care of our clients and we take care of our people and our team members. And whatever our strategy is in service to that.
Got it.
So it's a healthy way, I think, for us to not feel like we have to react to something that the industry is doing.
But you're aware. Obviously, you're aware.
Absolutely.
You see what's going on. You have conversations. I mean, obviously. I want to. Go ahead, Jay. Please.
Relationship with Ron at CrossCountry. A lot of respect for him. We service for them, and so we definitely know and have our finger on the pulse. But I mean, look, I think Varun said it well. Every day when I wake up is maniacally focused on execution. Right? We have this integration that we have to get through. We have to continue to deliver results for all of our stakeholders, clients being top of the list. But that's where I want us to be focused. Ignore the noise, focus on our strategy, and just execute. And
that's good. That's
how I think about life.
Yeah, it's good. It's good to have blinders in that way, right? Because things can seep into the DNA of the company and very counterproductive. But Varun, you said something very interesting about leads. Like you've got the ability to turn on the lead flow beyond what you can service and manage right now, obviously, or you'd be turning that on to a greater extent. So my question to you, Jay, as one of the greatest call center origination leaders ever in the history of this business,
put that on a t-shirt.
How much of that do you think about? I mean, do you sit and I know you have these steps that you've got to make, right? Like you've got to get from here to here to here, but then you look out and you see, my goodness, like I could drive in with this machine another 5,000 leads a day. How do I solve this problem to be able to make sure that we are getting every single last lead in here and service? So A, how much time do you spend thinking about that? And B, what is your goal? What is the time frame to be able to close that gap?
Yeah, look, I spend a lot of time thinking about capacity and, how do we position the company to be able to take the additional 5,000 leads or whatever, that number ends up being. And what's happening, Greg, is because of our investments in tech and product, you're actually seeing, the capacity, dream come true, where we can actually do a lot more with the same number of team members. And so as I think about the ability to handle that, I think it's, our investments in those areas are what's going to pay the biggest dividends. The other thing I would say about the leads, and Varun mentioned this, is it's really a marketplace. I mean, we want to be able to give our pro, partners leads. We want to be able to, have the flexibility to give other, potential partners leads. And so I think of it as a bit of a marketplace as well. But
you've got them coming in from everywhere, though. You've got this potential to turn that spigot on like no other.
Yeah.
Right? So what is it? The second part to that question was, as you look out, how long do you think, however you do it, retail, wholesale, whatever, like how long, what is your goal to be able to wake up one day and say, we're bringing in as many leads as we can, and we're tackling every single one in the manner in which we want to tackle it? Is that a year? Is that 2 years?
I think I mean, look, if you look at kind of our strategic vision and strategic priorities right now, I think you're probably a year to 18 months away from that would be my
Got
answer.
it. Exciting.
Yeah.
Exciting times. All right. So we're getting close to the end here. Do you guys have any questions for me? No, I'm just kidding. So Varun, Compass, and this thing that's happening with Compass and exclusive listings and private listings, and now Zillow's followed suit. Now EXP has followed suit, and there is a large segment of people, well, maybe it's 50-50, that feel like that's not in the best interest of the buyer, and to not be able to have full visibility with things like price cuts and days on market. And you said something very interesting to me as we prepared for this call, that people over-index the buyers and don't spend enough time on the sellers. Can you double-click on that for me, using an all-in term, by the way, the All-In podcast, which you're to blame for getting me hooked on that. You're the reason I get yelled at in the morning by my wife for not, feeding the cat, walking the dog, getting the kids to school on time. It's all your fault. Thank you.
They got to give us something for some free promotion from free marketing. Shout out to Chamath. But no, look, I think first off, I want to be clear. Like, any marketplace in and around housing that has multi-sides, you have to focus on all parties, right? And so around a housing transaction, of course, both buyers and sellers are really important, and you can't have one without the other. But I think what's interesting here is that there's been a narrative that has been very much, I would say, like 99% focused on the buyer. It's been very sort of extreme, and that's important. Obviously, like, we want more folks to be able to buy homes. But I think what's interesting is, my big realization and just sort of studying this and being new to it is that the most important thing is that you have a home to sell, and you cannot have that without a seller. If you don't have enough sellers, you cannot have any buyers. That's just like very basic fundamental theory, right? It's not complicated. It's not rocket science. And so I started asking myself this question, which is, one, is there a problem? And I think we know there is a problem because there is no inventory. You have demand, and you have rate dynamics, you have home price dynamics, but there is a fundamental issue that there is just no inventory. Like, I live in Michigan. I've been looking for a house for the entirety of time that I've been here. I've not been able to find one. The rate at which new inventory is coming online today is abysmal. There just isn't any inventory, and that's a problem, right? And I don't think that's a problem that anyone can argue with, right? Is that we just don't have enough sellers. And so if you kind of dig underneath that a little bit more, the bigger question is, well, how do you get more sellers? How do you reduce the barrier to entry? And that's just a very, very simple question that's kind of hard to argue with, right? And part of, what I started to wonder, especially as I studied and learned, is that, like, there is a lot of friction to how you bring a home to market. There just is, right? And it's not about transparency or trust or any of those things. It's just that, like, a seller has to go through a lot in order to market a home and sell a home. There's no concept of pre-marketing. There's no concept of being able to test a price. There's no concept of, my home is on the market today. Maybe it's not on the market tomorrow. Maybe it's on the market for 2 hours. Maybe it's not on the market. Like, we have these incredibly binary terms to reflect something that is much more nuanced. And that's an issue in my view, is something that is incredibly antiquated. Why can't every home be for sale theoretically, right? Like, why can't you engage with a home that's not for sale, right? So I started asking myself some of these questions, and that's where really I started digging deeper and deeper. And you start to realize that there's just a way that everything has been done. And there are these terms like your home is on market or not on market, or your home is for sale or it's not for sale. And I'm like, well, is that really the best way? Is that the only way? Does that really serve sellers? And does it then serve buyers? And I came up with an answer that the current system is not working. We've got to be able to try to do some things in different ways. And so, I think the viewpoint is pretty simple. It's to have total transparency and access. So anyone should be able to access any sort of listing. But how do you lower the barrier to entry so that a seller can sell their home however they want, and they can market their home however they want? I mean, it's their home, right? And so if they want to price test, they should be able to price test. If they want to be able to put their home on a market today and take it off market tomorrow, they should be able to. And so these terms like price drop history and days on market are attached to, in my view, a very antiquated concept. And I think that it's not the only thing getting in the way of more sellers putting their homes on market, but it certainly doesn't make it easier. And so it's not really about transparency. I think that the conversation has become about that. I think the conversation is more about something more basic. Like, how do you just get more sellers to feel more comfortable, like having their home on the market or off the market or on the market again? And I think that's the problem, and that's the question that I'm interested in asking. And that's the question that no one has really been able to answer, because it gets obfuscated in this, focus on the buyer thing. And I'm like, well, if you don't have enough sellers, it doesn't matter how many buyers you have, right? It's not a chicken and egg problem. You have to have more sellers on the market. That is one way to kind of break the logjam.
Well, that is interesting. Why can't people's houses always be for sale, right? If someone wants to knock on your door because they drive by and they see it and they're like, "Wow, I'd pay $80,000 more than the Redfin estimate," they should be able to pick up the phone and call the buyer. That is very, very interesting.
And don't you want to know, if you're a seller, that dynamic might be possible, right?
Yeah,
like,
it's a great point. Yeah, for sure.
So that's
gentlemen, anything you want to say in closing here, Jay? And anything you want to say, or Varun?
Look, I think, Greg, it's been great to spend time together, and thank you for doing this. I think we've said pretty much, everything that we wanted to discuss and say, but I would just end with, I'm excited. I'm excited about this part of the journey, where we're at. I'm excited about the team. I'm excited about the strategy. I feel great about, where we're headed. And I really do think, as you feel the same way, this is an industry that needs disruption. I mean, we need to do a better job serving clients and customers. And, I think together we can do that. And I think that's ultimately why, we decided to partner, is to really make a difference in this industry. And I think we can.
Yeah, I think it's well said. I mean, Greg, I just want to say thank you for having us. I mean, we are big fans of the work that you do, and you are a champion for all of us. And I love this podcast. We'd love to do more with you. And I think that Jay said it well, but I mean, I think we all stand together to try to make housing better for everybody. And we're happy to do our part. And we'd love to have more conversations with folks who want to partner with us and want to be part of the ecosystem. And, our approach is very open, which is why, I love your content, love the work that you do with this podcast, and hope to see you continue to be healthy and happy and successful, my friend.
Me too. I appreciate you saying that. Jay, I think if I was sitting next to Varun, who's got this star quality to him, I would probably want him to be like my personal wardrobe guy. Take me to Neiman Marcus, take me to Saks, take me somewhere and freshen up my digs. Has your wardrobe improved at all? Has he given you any tips? Not that you're not a good dresser, but no one dresses like Varun.
I will say my shoe game has definitely improved.
Wow.
I'm still working on some others, but the shoe game is he's definitely made an impact there for sure.
Well, that's amazing. It's amazing you said that, right? Because this I'm gonna put a picture up right now that Varun will remember me taking, which I never posted. And Jay, so we're going to talk about the shoe game here. And Varun, you can't say anything to him, okay? So Varun and I were back at the backstage at the gathering last year. One of these shoes, the lace or the non-lace one of them belongs to me, the other one belongs to Varun. And so I'd like to know, if you went shopping today and you had to have one of these, since your shoe game has improved, which shoe would you probably buy?
I'm going to go with the no lace.
100%. Okay. All right, Varun, you win.
We got to get you a pair, Greg.
Yeah, I'm ashamed to tell you what the size is, Varun. Let's do that offline. Guys, I appreciate your time. This has been amazing. Appreciate all that you're doing for the industry and how transparent you are about it all, and look forward to some follow-up conversations.
Thanks, Greg.
Thanks
Take
a lot,
care.
Greg. Appreciate it.
All right. Enjoy your Monday, everyone. Take care.
Thank you.